We are back again. I'm gonna be I can't speak. I'm gonna try and be a little more chill this time than yesterday. Yesterday I was super spazzy and I was super overwhelmed, and I was stressed out the whole time. Today I'm still gonna try and get things done, but I'm gonna hopefully be a little more chill because, dude, I can't live that stressed. I gotta just relax at this point. I'm not gonna trade my Apex accounts anymore, guys. I'm at the point with my Apex accounts where I just don't want to trade them ever again. I'd rather do that than blow them because I just there's no point in blowing them. I don't if I don't need to blow them, then I'm not going to. So I'm just gonna never trade them again. I'm gonna restart over with my Top Step, or starting over with Top Step. Just gonna probably buy one 150k account at a time and go from there. But guys, these markets, they're so perfect, and we just gotta keep locking in and stay focused on the grind because the perfection in these markets is unbelievable. So with that, I'm also gonna start possibly trading a personal account, and I am going to have pretty good risk management with it. I'm gonna treat it like my Apex accounts, where I have a strict daily drawdown, and it's probably meaning 2% of whatever the value is, and I have a very good scaling system as well for the personal account, so that's kind of cool. That I'm gonna implement. When I hit a certain level, I unlock the next risk tier. But yeah, that's my plan. I'm starting out with not that much, but yeah. Anyway, let's review the market. So let's actually get both these screens up. So here is one screen and here is the other. Let's show this screen first. So I talked about this, right? We had SMT with a 90-minute high and then a 1-minute rejection block, and you can see how this sponsored price to go lower. I'm actually curious if we measure this out, how far down this goes. Yeah, you can see this actually goes. It's crazy. This is Powell's model, guys, and look at this, right? We go all the way down to the 8th standard deviation. Genuinely insane. And then it happens again. Powell Trade's model is cracked, right? Phoenix model. So check this out, right? Phoenix model, it's so easy too, right? You literally just wait for SMT and rejection block, and then bang, just enter at the rejection block. Look at the risk reward you can get on this. And then it happens again. It happens right afterwards as well. Guys, I'm not gonna lie, Phoenix model might be the move to make it possibly one of my main models, because look at once again, we know how successful Powell Trades is with it, and I mean, you cannot deny the risk reward you can get on these trades. It's just absolutely insane. I mean, it's very simple, it's very repeatable, and yeah. And then it happens again later on. I'm gonna go through that in just a second. But yeah, Phoenix model, genuinely, like I said, Phoenix model is I'm genuinely considering making it closer to my main model because it's just so good. It is so good. I mean, all you need is SMT and a rejection block and a liquidity sweep, and bang, crazy risk reward. And what is this? 1027. But as always, it's just gonna be one of my models. Phoenix inducement, 1 minute. And guys, the more I learn about trading, the more I realize no one really knows what they're talking about for the most part, and everyone's just trying to make stuff up. And so because of that, I'm going to do whatever I want, and I'm going to do what makes sense to me, which means I'm going to be ignoring everyone, and I'm going to do what makes sense to me. And yeah, if you disagree with anything I do in the way that I do it, that sucks, because I'm just trying to do it the way that is the most correct, the way that makes the most sense to me. For instance, here's a 1 minute rejection block, right? You have to realize that all this stuff is gate kept anyways. So, like, no one else is going to teach you the correct way to do something besides observing the market itself. And so that's why I just kind of make stuff up and do what I want, because no one's going to tell me the correct way to do it. They're not going to be honest with me. They're not going to tell me here's exactly how you should trade. I mean, if anything, they're going to lie to me, right? And so because of that, I do what makes sense to me. Here's the 1 minute rejection block, right? And guys, the 1 minute rejection block with S&T goes crazy. This is so powerful. Look at that, right? We have SMT where, what is it? Where S&P makes a lower low and then NASDAQ makes a higher low. It happens twice today. Literally, I already know. It's always like this, dude. Because the thing about Phoenix model is it's not going to work all the time. But when it does, you're going to catch the bottom or top of the model because you're getting in right at the S&T, if that makes sense. Because you're getting in on the asset. Well, it's even better because you're getting in on the asset that makes the failure swing, which means that one is going to be more bullish than the one that didn't create the failure swing, right? Since the S&P swept out the low and NAS didn't, NAS is going to be inherently more bullish than S&P. Yeah, the RR is always insane, dude. It's crazy. It's so good. And so, as well, look at this, right? We're below a key time. We're below 9:30. So there we go. That's another thing I'm noticing about Phoenix model is pairing it with a time level can often be powerful. I'm not sure. Let's see what other time levels we had here. Yeah, we're below, look at this, we're below all of our time levels. Is that a coincidence that the Phoenix model worked when we were below all of our time levels? No, I really do not think so. So yeah, that is why I just do whatever I want, because at the end of the day, people are not going to tell you the correct way to do something, so you have to read between the lines and do what makes sense to you, because people aren't going to tell you that. They're not going to hold your hand. They're not going to say, okay, this is how you have to trade the Phoenix model. Like, no, you kind of just have to read between the lines. And I'm sick of people telling me I can or can't do something when already 90% of traders are unprofitable. So why would I listen to you? You know what I mean? So we're below 930 here, right? And yeah, same thing, right? Enter the rejection block. Once again, you can also, you guys may remember that you can do a version of the Phoenix model where instead of entering right at the rejection block, you can actually enter at the consequent encroachment, so at the midpoint. And this is one of the most beastly ways to take the Phoenix model, because now you get double the RR. Instead of entering at the actual rejection block, you enter at the consequent encroachment, and your stop loss goes at the low. And this is gonna be like, they call this the Phoenix Mini. This is gonna be like insane RR, like genuinely insane. Now it's gonna fail a lot. Keep that in mind. But like this is gonna be insane. So yeah, Phoenix Mini, super overpowered. Right. So there's a Phoenix Mini. We'll do the Phoenix model as well. Yeah, look at that. Once again, how do you do Phoenix Mini? You basically observe an SMT forming in the market and you enter at the midpoint of the rejection block. It's not going to work a lot, but when it does work, it's going to be cracked. It's going to be cracked, right? So, once again, this is kind of why I also want a personal account, so I can go for some of these trades that are a lot higher RR and not feel so bad about it. And what I'm thinking actually about doing is getting a personal account and then decreasing the risk a ton and allowing myself 3 losses in a day instead of 1, so I can do crazy RR stuff because I know how to do it, right? And obviously it's not going to work all the time, but you know, when it does work, then I can get a huge bank on a huge trade, you know. So just a thought. This is SMT with, is this a 90-minute SMT? Ooh, yeah, look at this, right? Wait, let me think. 6 to 7:30, 7:30 to 9, 9 to 10:30, and 10:30 to, oh my gosh. Guys, these 90-minute SMTs are actually really powerful. Look at this. You see how this is a 90-minute SMT? Because, so 6 to 7:30, 7:30 to 9. So here is 1/4, right? 7:30, 9 to 10:30. And you see the low of that quarter is right here. And then 10:30 to 12, and the low of that quarter is right here. So this is a 90-minute SMT, which means higher probability SMT. If my loss is always low, I don't mind trying it. Exactly, that's what I'm saying. And, you know, it's also worth trying on demo a lot, because at the end of the day, like, it's going to take practice. And, you know, it's not always going to work. But one thing that's going to help it work is if it is a sequential SMT, right? If it's a time-based SMT. For instance, this one was a 90-minute SMT, right? Do you see what I'm saying? So let's actually make these lines darker here, right? So this one, so here's 1/4, the low of that quarter, and the low of this quarter is the SMT, right? So that is a sequential SMT. I just call it 90-minute SMT to help my brain not overcomplicate it, because it really kind of hurts my brain to call it a sequential SMT. I'm not gonna lie, and I don't know. I like keeping things simple, so just a 90-minute SMT keeps it clean. And then, yeah, 1 minute rejection block. We're below a time level. So let's screenshot this. This is Phoenix Mini, and then we'll show the version of it where it is just the regular Phoenix model as well. And then we could show the there's probably a flow state version of the Phoenix off of this, and that's one of the safest trades you can get, honestly, is flow state Phoenix, the one that I actually talked about in the video that I thought was Phoenix model, but it wasn't. Phoenix Mini, 1 minute. Yeah, Phoenix Mini 1 minute at 11:52. And then, as well, this is a regular Phoenix model as well. You could honestly just target here. Oh, you could target the 4th standard deviation, actually. That's a pretty clean way to do it, right? Now, you know, it's definitely worth trying on demo. Like, I want to definitely try this more on demo for sure. Yeah, there we go. Max extension hit. 90-minute SMT. Let's screenshot that. But it's kind of cool because when Phoenix model does work, you're going to be getting in at the very low of the market maker model. Essentially all the time. 1150 Phoenix model. Phoenix 1 minute. And then as well, like I said, if we wanted to get extremely precise, we could drop down to a 5-second. Look for our aligned time frame change in state. So where would that be? Let's drop down. Look for our aligned time frame change in state. We push into the rejection block. See how precise these markets can get, right? So SMT. So there's a few different change in states. To me, I'd say this one's the most obvious. So I'd look for entry on this. I mean, you could do this one. This one ended up being a little bit more precise, but I'm just going off of what I would probably do if I was to take this in real time. And I'd probably pick that one because I don't know. It just seems more obvious to me. And I think this is interesting. We probably tapped OTE. Yeah, so you see how we tapped the sniper model entry right here? Pretty crazy, huh? It's crazy how precise these markets can be. So, once again, guys, we just gotta stay locked in. And then, yeah, 90-minute SMT, 1 minute rejection block, 5-second change in state. And this is why I want to try stuff like this on a personal account, because just one of these trades is gonna make your, like, it's gonna make bank, right? I don't know. It's also just kind of my style. Like, I like higher R trades. I don't know. It's just my style. So you see how this went to 8R? And obviously, I'll be scaling out here, right? It's never all or nothing, but I'm just showing how we go to 8R. And honestly, guys, it's kind of cool because as I'm evolving as a trader, I'm starting to really understand my own personal trading style. And I'm understanding that my style is not the same as everyone else's. And that is just me. That is just me as a person, as a trader. And yeah, that's how I feel. So 8, 9, 10, 11, 12, 13, 14, 15, 16. So this is the 16th standard deviation right here. That's crazy. 16R right there. Let's make a new one for 16. Woohoo! That's so sick. I mean, what color should we have the line? You think that color is good? Yeah, we'll do this. We'll do 16 to 16.25. I kind of want to see if we hit the 30-second. It's an interesting thought. Hey, what up, Javier? That's so perfect. Dude, it's just crazy because, like, so this was a flow state Phoenix off of the 1 minute rejection block. We go from the sniper model entry, right? Here's the sniper entry. Thanks, Javier. Dude, I'm never giving up. I don't care. I don't care that I just blew my top step evals. I don't care that I'm not going to trade my Apex accounts anymore. Dude, I know these markets are algorithmic. I'm not gonna stop showing up. That's I mean, you can't get rid of me. These markets can't get rid of me. I'm never leaving. I'm never leaving, right? I mean, these markets are so obviously algorithmic. 90-minute SMT, 5-second change in state, 8th standard deviation, 16th standard deviation. I gotta save this as a new template. So from OTE to the 16th standard deviation, that is 50R, right? Just crazy. You know what I'm saying? I chickens out on trade in the evening, bro. No, but it's okay, man. It's okay. There's always another trade. There's always another trade. Just stay locked in, bro. You're already banking it so much. And being a little conservative, not the end of the world. Yeah, I'll check Discord when I can. But yeah, definitely being conservative, not the end of the world, right? Yeah, I want to also look at the 30-second standard deviation here. So it should be like this. So bang, bang, bang. So 7. And then now we need to get up to the 30-second. So I'm trying this out one more time. Dude, this actually could be an algorithm. Like, it's so perfect. 1, 2, 3, 4, 5. Wait, that's not what I wanted to do. I wanted to go like this. Yeah, there we go. 1, 3. So it should be right here. You see that was the exact top? Bro, I can't make that up. That was the exact top. Holy crap. Holy crap. You know how insane that is? No way. That is... No, that's actually mind-blowing. What? Dude, that is mind-blowing. Holy... Nah, because why did we go perfectly there? Dude. Dude, one of these days, I'm going to hit $100 on stream. I'm going to hit $100. I know how to do it. I know how to do it. What's stopping me, huh? What's stopping me? I'm not scared. I'm not scared. I know these markets. I know these markets. 32 right there. Let's see if we can hit the 64th standard deviation. Right? Wait, let's actually go back. $32. Dude, this is crazy. Wait, let's see this one. No shot. If that's actually the exact high, I'm gonna blow. My mind's gonna be blown. If this is the exact high, my mind is going to be. It's gonna be shattered. My mind is gonna be completely. It's gonna be gone. There will be no mind left. So I measured it from here to here. So I gotta measure it from here. It actually might be, dude. Bang. Bang. So that okay, so this is 48. Holy. Bro. That's crazy. Oh my gosh. Nah, cause what? Cause what? No way. Nah, cause what? Nah, cause actually what? That is I just can't even comprehend that. From the sniper model entry to the 64th standard deviation. Oh my. Holy crap, dude. You see how perfect these markets are? No, this is like my mind cannot comprehend this. What? No way. No way, dude. My mind literally cannot comprehend this. What? Dude. The move is just... Oh my gosh. I don't know. I know this was supposed to be a normal backtesting session, but guys, you can't deny this is ridiculous, right? Once we get the SMT, we get the change in state from the sniper model entry, stop loss at the low. Nah, like, I was gonna make this a normal recap, but this is ridiculous. Oh my. Dude. No way, dude. Oh my. What is that? What RR is that? No, because what RR is that? 111 to 1, dude. Bro, this is crazy. What a random guy. Dude, no, I can't comprehend this. My mind cannot comprehend this. How could this be possibly this perfect? Because 8th standard deviation hit, 16th hit, 32 hit. 64 hit. This is 111R. Imagine, it kind of depends. You could even make the stop loss a little tighter, actually. Oh my gosh. 121R. Oh. What about this? Why is it only saying 38R? No, see, that's wrong. I don't know, man. I still think it's pretty cool. I'm going to just put it in my journal. No, because, like, what? Bro. Who's running these markets, guys? I can see them. I can see them. I can see them. I don't know if they can see me, but I can see them. Very obviously. Right? There's someone running these markets. $11.57. Phoenix model to yeah, let's just call it Phoenix model to 64th. That is just insane. But yeah, that's I'm just gonna delete this, dude. What the heck? Did I save this as a template? I didn't. Oh my gosh. My mind can't comprehend that. I need to go on a break. That's just insane. Guys, from that Phoenix model entry, I mean, we enter at that rejection block, we can get up to this high. That's 64R. It's just crazy what's possible, you know? Okay, let's do regular backtesting now. It's time to backtest real, reasonable, regular trades. But I still think that is so fascinating. I mean, you can't argue with that precision. That's like going to court and it's literally like a videotape of them showing the murder. Like, I have the whole thing. It's all right there. Perfect. Everything got hit. Right to the top of that model. I mean, you can't deny it. It is just perfect. Anyway, let's look at some real trades. And I already kind of saw one going into the afternoon, which is kind of cool, right? The hard part is, right, we know what good trades look like. I mean, it's pretty obvious what a good trade looks like, but we have to wait for it. That's the difficult part. Anyway, we had an S&T with this rejection block. Actually, specifically, it's a special S&T. It's a 90-minute S&T, meaning it's a stronger S&T because it's a sequential S&T, and I don't like to call them that because it hurts my brain, but yeah, it's a stronger S&T. It's a 90-minute one. And then off of the rejection block here, that's the bottom of the model. So, bang. And we perfectly tap consequent encroachment. Not perfectly, but we tap consequent encroachment. Right? 90-minute SMT. And then basically the trade that I was thinking is, well, This is obviously the bottom of a model, right? We break structure. I mean, I don't know if that's obvious. It's probably not obvious. I'd say this one's obvious. I don't know. This is why we backtest, right? So first we break structure here. Once again, this one's not super obvious. I don't know if I would use it, but I'm just observing what I'm observing right now, which is that we got the 90-minute SMT and then we broke this high. All right, I'm just observing, and then we come down to this gap. So here's our first 2022 gap on the 1 minute. And wow, right? That was beautiful, right? Now I'm wondering if there was a higher time frame PD array. That'd probably be helpful to know. But then we break this high again. And we end up coming back to another gap. This one's not in discount, but I mean, I would consider this a gap. And you can tell we're algorithmically driving towards where we want to go. This is how I can tell the market is moving algorithmically. And then, once again, another gap. And when every single gap starts holding, it's like light bulb going off in my head. Okay, market's ready to be in algorithmic displacement, right? This is where you full port. I'm just kidding. I'm kidding. Do not do that, please. But like, no, for real. Like, when you see the market just start to respect gaps over and over again like this, it's very clear that the market's about to start to deliver algorithmically, right? And so anyway, now these two were not in discount, but this one was. Like, look at this. I'm actually interested to look. Yeah, that actually does tap equilibrium. No way. Wait. Okay, that's crazy. So it actually does tap equilibrium. I was wrong about that. And I was wrong about this as well. Oh my gosh, it taps equilibrium every single time. Okay, that's actually crazy. I did not realize that. So, right, here's equilibrium. And then this is how you know the algorithm, it's like the engine is turning on. Like, I can see the engine is turning on here. This is like, there's like what's like a good example? This is like, yeah, they're warming up the engine, right? They're warming it up. And you can just tell that it's about to go. Boom. Equilibrium hit. Equilibrium of this leg hit. They're warming up the engine. They're getting ready for the race. Equilibrium, equilibrium, equilibrium. And then, bang. We go. Man, guys, I can't make this up. It's crazy. But yeah, this is how you pyramid. And also look, right? Inducement of this low, right? This is inducement. So technically, if you were super patient, you could take that as an inducement. Below the 2022 gap. And then if you're super patient again, you could take this inducement into equilibrium. And then if you're super patient again, you could, well, this one actually, yeah, no, this one actually makes sense too, because this one, what is this? A volume imbalance. So once again, this is the volume bounce below a 2022 gap. What do I call that? The backboard, right? So the backboard going to be incredibly sensitive anytime you have a volume bounce below a 2022 gap. Once again, guys, the way that I figure out all this stuff is I realize no one's going to teach me it. You just have to observe it. You have to observe the market because the market's going to be the greatest teacher. And this is just how you realize stuff. You just look at it. You just look at it. The market's going to teach you. It's going to teach you everything you need to know. So inducement. Right? You see what I'm seeing here, right? Every single one will be tap equilibrium. Equilibrium tapped. Equilibrium tapped. I'll make it like this. Equilibrium tapped. And then volume imbalance held right here. And then, yeah. It's kind of looking like a mess now. I kind of messed this up. Let's just get rid of all the inducements and let's get rid of the equilibriums. I just want to show the 2022 gaps. Let's actually get rid of premium and discount as well. We get it. They're all on discount, all right? But every single gap holds. And then we algorithmically drive up to our drawn liquidity. Once again, guys, I've noticed 22 gaps will still hold if they're not in a discount. So it's like I don't really feel like it has to be in discount, but it usually should. It should be an equilibrium or discount. Alright, so there's algorithmic displacement. Then if we took the lower 2022 gap, guys, I feel like I'm starting to get spazzy again. I'm sorry. I don't know why I keep doing this, but I keep getting spazzy. So let's just say we took this as the normal entry. Alright, the normal entry being 1 minute breaker structure. I mean, once again, this one's not super obvious, so I don't know if I would take it because it's not an obvious breaker structure, but I still want to take note of it, right? I'm going to mark this out as a 2022 inducement, right? Because we induced this low. That would be super high probability, right? Because we already came up once, and then we hit that low again, and that's inducement. So bang, stop loss at the S&T, and then yeah, here you can see actually we need to make this, there we go. Nah, because like these markets are so perfect. And then once again, we can use standard deviations of the manipulation leg and project this out. 1, 2, 3, 4, bang. All the way up to the fourth. Perfectly hit. So this 2022 model hit 11R if you took it as an inducement. And, ooh, look at this inducement. Look where it occurred. It occurred at my sniper model entry, right? The OTE of the manipulation. Whew, crazy. So OTE of the manipulation perfectly hit right there, and that also is an inducement of the low. So this is the sniper entry. Once again, we'd already gotten, well, we hadn't got 1 minute change of state yet, but you don't need the change of state to, sometimes it'll enter before. And then yeah, we go up to that fourth standard deviation. know why I'm feeling so spazzy. Once again, guys, I'm not trying to say we should be going for higher R. I do think leaning towards higher R will eventually be my long-term style, and especially when I get my personal account, because then I can, I'm gonna decrease the risk, and I'm going to provide myself more opportunities to take losses so I can shoot for bigger gains, right? So that's something I'm considering on my personal account. On my real account, or on my, I guess I'm not doing Apex anymore. So on my Top Step account, which I'm gonna have to get a new one, I'm going to so this is 1209. I'm going to be taking more realistic trades probably, but I do think it's more my style to take a sniper shot, because when I'm right, I'm usually very, very precise. When I'm wrong, I'm usually very wrong. So, I don't know. I think that makes sense to me, personally. 2022, 1209, 2022, 1 minute. Oh, wait. We forgot to mark it as a 2022 inducement. Right. 2022 inducement. Was that right? Did I spell inducement right? Honestly, I don't care. And then here's the normal 2022 entry, where you just enter at the fair value gap, right? Liquidity sweep. Well, technically there's not a sweep, but because S&P swept out the low. Okay, this is actually kind of confusing. So technically there's not a sweep, but I'm considering there to be a sweep because S&P got the sweep. I don't know if that made any sense. Made sense to me though. Anyway, S&P got the sweep. So I'd personally consider a sweep of bodies a liquidity sweep, because you're still sweeping liquidity, just not in the form of a low, in the form of a candle body. Because the majority of trading happens within the body. So the wick, it's just going to represent that erroneous price action, as ICT says. So, if we go through the body, that means we took out most people's stop losses. So this is 1204. You took this? Let's go, Kirk! You beast, dude. You beast. Yeah, this was super lipo. This was super, super lipo. Very impressive, Kirk. Very, very impressive. Did you actually go for like this high of RR? What was your RR on it? Or did you scale out? Like, what did you do? That is that's not impressive. Like, genuinely. 1204. This is the regular one, the 2022 model, and then on the 1 minute. Crazy. Is it morning for you, Kirk? That's crazy. Yeah, there's so much opportunity today. And then let's actually look at the morning, right? So something I will say is we got to be careful when the market's accumulating, because during this time I got wrecked, and this was accumulation. The market was accumulating, and so I gotta be a little bit more careful. Dang, Kirk, that's awesome, dude. You absolute beast. It's impressive. It really is. So the trade I took today, like the propulsion block trade, it would have been good if price action didn't look like. Well, actually, I don't know. It doesn't look terrible, but once again, for the propulsion block trade might have been okay, but what I'm saying is the market was accumulating. So, no way, Kirk. You legend, dude. You're genuinely becoming a legend. I'm so proud of you. Yeah, I'm going to get a new 150k eval for Top Step. Yeah, market was accumulating. Be careful here. So I'm going to make a note of that. And then you can just, once again, you can just tell that, you know, when we purge this high, this is manipulation, because look at where the accumulation was and look at where the manipulation is respective to it. I literally can feel the market already dumping. I can literally feel it. It's like gravity. It's just gravity. But yeah, there's so much opportunity today. And that's why I'm considering, when I get my personal account, I'm considering lowering my risk down a ton and then allowing myself to take up to 3 losses, because I know when I'm right, I'm usually right. I usually blow it out of the water right. When I'm wrong, my stop gets absolutely smacked. And so I just feel like giving myself more opportunities, especially because a personal account I can go for higher RR, makes sense for me. It's just my own thoughts, right? Let me know what you guys think about that, but that's kind of what I'm thinking. When I do get a personal account, I'm considering taking stuff like that. Accumulation was here. Important to recognize that and be careful. And then as well, we talked about how this was... Well, we did talk about how this was an SMT. Here, let's just bring it back up again, right? We had 90-minute SMT with this high, meaning from here to here. Wait. Now that I'm actually looking at it. Oh, okay. Yeah. It was 90-minute SMT. Because the quarter starts at 7:30. So 7:30 to 9, that's the high, and then 9 to 11. You see what I'm saying? So this was 90-minute SMT. Stop loss taken from London pre-market and equal highs. We're creating validated short entries. Wait, taking London highs? Wait, London highs? You lost me at London highs, bro. Wait. I don't know, but maybe explain it again, because I'm a little lost, bro. But it sounds like basically you're saying short entries got validated at some point in there. So yeah, I think we might have already recorded this, but I'm gonna record it again, right? So 90-minute sweep. Pre-market. Oh, yeah. Yeah, that sweep of pre-market was really nice. So we gotta make a new when I can tell I'm making progress when I'm making new templates, because that means that my brain is moving in a direction that I've never thought before. Whenever I make a new template for something, I can tell my brain is making an idea of something that I've never thought before. Like I've never thought, oh yeah, 90. I gotta be thinking about what kind of liquidity are we sweeping? We're sweeping 90-minute liquidity. Apparently it already exists. That's okay. But yeah, pre-market S&T. Stop loss taken from. Yeah. Yeah, this is definitely a stop run. You can just tell that there were stop losses here. You see why? I mean, it's just very obvious LRLR. We should actually make note of that. Like, conceptualize the liquidity, right? Here it's very obvious. Here it's very obvious. There were stop losses above these low resistance highs. You see what I'm saying, right? It's very obvious that there's just a bazillion stop losses here. So we're just gonna put little quotation marks, stop losses, right? It just becomes very obvious that there's just stop losses above here. And so this wick takes those stop losses. So that wick is a strong rejection block, right? So we're basically saying, okay, this wick is holding these stop losses. This wick is holding these stop losses, and it has an SMT. So we have to take these stop losses and transfer them to an opposing liquidity pool, right? And so here's that 1 minute bearish rejection block. This, yeah, you can literally think about this wick as like this wick it is literally like, this wick is going to be super strong because it very obviously took stop losses with SMT, with SSMT, right? So this wick, it's just gonna be an absolute beast, right? After that open, you want to see price hold below that wick. Exactly. That's what I'm thinking too. And so it becomes very it makes a lot of sense once we sweep this high that, you know, this was going to be manipulation here. You can almost just, like, if you get really good at reading the market, you can almost just tell how likely this is going to be inducement. Because it literally looks like it's like a tower ready to fall. You can just see the stop losses got hit. You can see the SMT. You can see the rejection block took those stop losses. And then you see this range and you see how we push up into it. It literally looks off balanced. It literally looks like it's about to fall. Literally, like, here, let's record this again. Experienced traders can literally look at this high and tell the market is about to plummet because so much sell side below. After that open, you want to see price hold. Why? Because there's no more liquidity above it, so it's more likely to hold. Exactly, Javier. Right on, bro. That's exactly right. It's exactly right. Man, this wick's gonna be just absolute beast. So then we have to get in on this move. That's the secret, right? We got to get in on the move lower. So how do we do that? Alright, so then we had a 1 minute rejection block. We can take this, align this with a 5 second change in state of delivery. Oh my gosh, okay. We need to acknowledge the fact that this order block just perfectly held price. It's kind of cool. Was there low time frame SMT there? What was this? I actually am curious. 1030? 1036? Yeah. Wait, this is Friday. Oh, we need to go to Tuesday. Why am I on Friday? What the? Okay, I'm looking at it on my other screen. 10:30. Yep, it's exactly as we thought. There's 100% SMT here. Um, yeah, it's most obvious with this high. I guess it's obvious here too. But yeah, there's definitely SMT here. Crazy. Anyway, from here, right? Once again, 1 minute rejection block with liquidity sweep. I want to align this with a 5-second. So theoretically, right? There's two different versions of this, right? There's this 5-second change in state right here. Theoretically, this actually holds. So we'll show this one first. I don't think that's the high probability one, but that is one, right? I just want to show that because it does hold, and we do hit the sniper entry. Look at that sniper model entry right here. And honestly, I need to update my whatever it's called. Yeah, let's update this. We're gonna get rid of the half ones, and we're gonna add in 16. We're gonna add in -32. And trust me, I'd love to keep the half ones, but I don't know. I think this is more useful. The half ones you can kind of you can eyeball, honestly. But I can't eyeball 64 standard deviations out. Bang. That's crazy. Yeah, this is just. I mean, if that ever hits, imagine just leave one runner for each. If that ever happens, you are banking. But from OTE of the model to the 8th standard deviation, look at that. Look at that. And then we actually go to the LRLR. So here's the LRLR. These markets are perfect, guys. I ignore everyone who says they're not. Just ignore them. They don't know what they're talking about. I mean, these markets literally move perfectly. Here's the sniper entry. Here's the 5-second change in state. Right, sniper entry, 5-second change in state, down to the LRL. So down to the 8th standard deviation, right? Once again, this is only just one way you could take this. This isn't even the complete way you could take it. There's a better way you could take this, in my opinion. I think this way is kind of risky, personally. So the secret is being able to read this live, because easier said than done. But can you do it? Yes. Yes, you can. So here's the 5-second change in state. Here's sniper entry. Man, imagine waking up in the morning, you know, you're at your $10 million house, your girlfriend or wife's making you breakfast, and you're just chilling in your sweats, like, just like sitting on your bed looking at this, and you make someone's yearly salary in one trade. Oh, that would be so cool. But yeah, no, I'm not in it for that lifestyle. I'm in it because I want the freedom of time. The freedom of time is my biggest thing. Like freedom of time and freedom of location. And I've said this so many times before. Like I don't need a lot of money. I just want to have the freedom that comes with money. So that's how I feel. But yeah, one day at a time, guys. One day at a time. And then we continue down to the LRLR. So let's go ahead and screenshot this. $10.34. This is a, what is this? It's a 1 minute rejection block, 5-second change day of delivery. Off of a. So this was a Phoenix model rejection block. So this is a flow state Phoenix. 1034 flow state Phoenix. Yeah. I don't know if that made sense, but I think you get what I'm saying. Maybe. Maybe not. So 1034 flow state Phoenix. All right. 1 minute, 5-second. And then we'll do 1034 flow state, the flow state sniper Phoenix right here. The flow state sniper Phoenix at 1036. Flow state sniper Phoenix. 1 minute, 5-second. And then yeah, enough of looking at that. Let's move on. I wanted to show you the actual realistic entry, right? I think the realistic entry is just calling this whole thing manipulation and then marking this out as a change in state and then entering on the retest of that, because at this point it becomes a lot more obvious that we could go run liquidity here. So I would take it like this. I think this one's a little more reasonable, to be honest. And then you could measure out this, and then we could just target the fourth here. It's in the same exact spot as the eighth. So, pretty cool, right? Bang. So this is how I'd probably do it if I had to realistically try and take it, is I would wait for that and then bang and then we go lower. And if we had came up to this volume imbalance, this probably would have been very sensitive. But we didn't. Oh, you know why we didn't? Because this one came up. We came up to this volume imbalance. See, the market's perfect. It's literally so perfect. So crazy. accumulation, manipulation, and then distribution. And once again, you can just mark it out like this, but either way, it doesn't really matter. Volume balance, 5-second change of state, count to the fourth, bang. So, yeah, pretty cool. So this is also a flow state Phoenix, 1 minute 5 second. So 10:37, and I think allowing myself to take a loss is going to, like, when I take a live trade, it's going to allow myself, because what I'm going to do is I'm probably going to allow myself to trade my personal and then allow myself to take a loss on my personal, and it's going to allow me to be a lot more relaxed and a lot less stressed out, because I know when I'm going into the market and I'm like, I literally can't have this be a loss because then I can't trade again today, it makes me all jittery. It makes me all, like, frantic because I feel like I have, you know what I'm saying? And I feel like, for me, just having the peace of mind, like, of I don't have to be perfect, but I should still take a good trade is maybe what's right for me. But I don't know. Once again, like, I kind of like the idea of shooting for higher RR on a personal account, because then I don't have to worry about rules and stuff and all that kind of stuff. So 10:37 full state Phoenix, 1 minute 5 second, version 2. Whew, guys, this is a good backtesting session. This is fire. I think, like, I'm genuinely, we're getting so much out of this, I feel like. And it's also a 5-minute rejection block, and I believe we probably tapped consequent encroachment of it. Well, kinda. But anyway, moving on. I mean, there's just a lot of opportunity. Like, let's try and find some real trades that are not, like, degen type of moon boy trades. Let's try and find some real trades, because obviously we want to be able to catch something for real, right? And I think one that I tried taking live, right, guys? I actually did take it live. I just didn't click the button. But I don't know why I keep doing that. But yeah, I marked this out live. I just didn't click the button because in my head, I was waiting for this change in state, but then when we got this change in state, we closed way too low. So I should have taken this change in state, but yeah, I marked this out live, and I should have just clicked the button right here, because at this change in state, we're basically good to go. And this one makes it even more obvious. And I was waiting for this close, but this one's fine, and so is this one, I guess. And yeah, so 30-second change in state. And then we had a 5-minute 5-minute rejection block. You can call it whatever you want. 5-minute rejection block. Call it 5-minute rejection block. You know what? Let's just call it that. 5-minute rejection block. And why was this a strong rejection block? We already talked about it, because we sweep out stop losses, and we also have SMT with previous day's high. I don't need to draw that out again. We already know that this is a high probability rejection block. So yeah, delivering from CE of the rejection block as well. So yeah, high probability rejection block. Because it took buy stops with 90-minute SMT. And then, yeah, 30-second change in state. Let's measure out standard deviations of this. Bang, bang. 1, 2, 3, 4, 5, 6, 7, 8. Perfectly hit. All the way there. For fun, let's look at this 16th. Nah, we don't go down there. Okay. Anyway, yeah, very, very clean, right? Accumulation, manipulation, and guys, I did try and click this button. I tried to click sell, but I just kind of, I was waiting for this one and we didn't get it. So I almost took this one live because this one was a more obvious one. It was on the higher time frame. But I just didn't click the button because I was waiting for the lower one and we didn't get it. But anyway, 5-minute rejection block. We tap consequent encroachment, 30-second change in state, and then we go down to the 8th standard deviation. Bang. Pretty cool, right? So 5-minute PD array. We'll actually mark out everything because why not, right? I want it to look nice. So 7:30, that's our true session open. So let's mark that out. So we're actually entering above that, which is kind of cool. And then we have SMT with this high, and that means this is a 90-minute SMT because the high of the 7:30 to 9 and the 9 to 10:30 quarters are having SMT. And then it's also a sweep of the 90-minute high as well. Right here. So yeah, 90-minute sweep, 90-minute SMT, 5-minute rejection block. It's a stronger rejection block because all these things we already talked about. Yeah, pretty much right on the change state delivery close, and with this liquidity sweep here, we can enter. Let's actually go like this. There we go. That actually looks a lot better. So yeah, now it's very clear. Okay, there's accumulation, there's manipulation. Once again, guys, the market's always right. People always complain the market is too hard. It's not following their model. It's like, no, actually, the market, it's not just going to follow your model just because you want it to. It's going to do exactly what it's going to do. And it was very intentional about what it does and why it does what it does. So people need to stop crying about the market conditions being bad. Like, no, the market's always right, guys. The market's always right. Stop complaining about the market conditions. Market is always right. You just got to go into the charts and actually learn from it. 30-second change in state. Bang. Down to the LRLR. And then also down to the 8th. Let's actually just mark it out like this. Right, accumulation. Alright, screenshot this. This was a 1038 flow state Phoenix. See, I need to make an update video on the Phoenix model because the version I made is not so good. Because the version I made is my own adaptation of it. It's the flow state version of the Phoenix model. 1038 flow state Phoenix, 5-minute 30-second. I'm gonna take a break. I'll come back and then look at a little bit more stuff and then eventually film the market recap. So 1038 flow state Phoenix, flow state close Phoenix. I don't know how to. Sometimes I'm not even sure how I'm supposed to notate it because I'm like, yeah. Flow state Phoenix. We'll call it flow state Phoenix. You know what? Nah, I'm not gonna put close in there. It doesn't matter. We already know. It doesn't really matter. We already know it can be a flow state close or a flow state retest. I don't need to specify. It's flow state Phoenix. 5-minute 30-second. I'm gonna go to the bathroom. And yeah, I'll be right back. Oh, my phone died. I'm actually curious. I kind of want to check how many people are watching real quick. And then, yeah. Key flows live, 107 watching. Dang. Yeah, five people watching. That's pretty good. Okay. Alright, guys. I will be back. I'm gonna charge my phone. And then I'll come back, maybe like 30 more minutes of backtesting. The annoying thing is there's always so much to review every single day. And it's like impossible to review it all. Like that's why I like doing the weekend backtesting sessions, because I always have more time on the weekend. So anyway, we're at the point where we know how these markets move. They move in AMD cycles, right? And it's just about getting on board that ship to go run liquidity within that AMD cycle. So now it's just a matter of, okay, we just got to be able to execute these live. And that's all. That's the only difference between where we are now and our future selves. You know what I'm saying? Like, it's just a matter of time. All right, I need to chill out. I feel like I'm being too spazzy again. This always happens. I'm like, I get too stressed out because it feels like I genuinely don't have a ton of time. But you know what? That it is what it is. We just got to keep going. It's like, it sucks. I don't have a ton of time. I wish I had all day to review the market, but I don't. Right? So we just got to keep moving. So this was also, 30-second, what's it called? 2022 model. And this one happens, it's crazy because you get in here, you can get in. See how every single 2022 gap is just baller, baller. Every single gap is just baller. Gap, gap. We don't even revisit this one. But gap. Actually, we do hit it right there. Anyway. What else do we look at today? Once again, all of this within here, I know I liked the propulsion block idea, right? I think that it wasn't the worst thing in the world, but it was premature. So what I was thinking, right? Remember I was talking about the trade I took with this one. We had a 1 minute propulsion block, and then we had another. So we have a 1 minute order block, right? It wasn't terrible, but it was a little aggressive and a little early. I hope that makes sense. Like, the market wasn't ready to go around liquidity because even though we have a nice propulsion block here that takes liquidity. I tried to take this live, right? Even though we have a nice propulsion block that takes liquidity, which is right here, right? And then I tried to enter with my Dynamis model to go lower. these stop losses have not been taken yet, right? So even though we kind of know that this is gonna go lower, that doesn't mean that you can just enter right away. You gotta wait for time and price to align, and that was when we actually took stop losses up here, right? So once again, here's a propulsion block. So it was order block, swept liquidity, propulsion block, and then you see how we reacted off of it. I was like, okay, all right, let's go lower, and I tried to take this, and if time and price were aligned, this would have worked, but time and price weren't aligned, right? Because we hadn't taken buy stops on the low time frame. So I tried this propulsion block trade live, and time and price were not aligned to go run liquidity. We had not had clear low time frame AMD yet. You get what I'm saying, right? It looks like, okay, we're gonna go run liquidity, but these stops have not been taken. Right, all the people that are trying to go short early have not been stopped out, and that was me, right? And yeah, that's essentially why that propulsion block failed, because time and price were not ready yet. Okay. So now there might have actually been an opportunity with this one, interestingly, because, well, I guess it's not super obvious. Yeah, I'm not gonna try and say that there was, because I don't think it's obvious. But I always love looking for propulsion blocks, because I think those are some real propulsion blocks offer really great opportunities. Like, this is a propulsion block, right? This actually is a propulsion block, and this is actually pretty nice, right? Here, wait, let me save this. OB. And then PV. So I'm just saving these templates just because I don't know if I have them saved. Okay, so this actually did end up working out. Look at this. Propulsion block, order block. And I guess we were just on the right side of the curve of the model. I mean, I don't know if this is the most obvious thing in the world, but... Oh, wait. Yeah, no, we do hit it. I was like, wait, did we hit it? And I think we do. Propulsion block. And then, yeah, 5-second change in state. I don't know, it's not super obvious, but still worth noting. I'm not even going to mark it out because it's not a realistic trade I would take, but I just wanted to mark it. Now, this is interesting, right? It's kind of like a Reaper gap a little bit. Anyway, let's move on. We don't want to stay on the 5 second too long here. Guys, there's more to review. There's so much to review. It's crazy. Yeah, so there's essentially two SMTs. This SMT was important to spot. So maybe an easier way to take this trade that wouldn't be so degen, right? This is a lot easier of a trade, is a 5-minute rejection block with SMT, with 90-minute SMT. It's a little easier. It's like lowering the difficulty. You don't have to take it as a 7R. This one right here. Yeah, this one right here. This is, this is actually a realistic version, right? And I personally would say not this change in state, although it does work. I would say this one is more favorable in my opinion. I just think it's safer. So yeah, this one's safer. A 30-second change in state, and then 5-minute rejection block. And I'm curious, do we hit the OT spot? We hit it before we get change in state. But let's measure out standard deviations. This one does go to the 8th, but not till way later on, which makes sense because this is a gap. So what do you expect, right? This is literally a gap. So obviously the market's gonna stop here. So like it's all just perfect. It's all just perfect. If you think you're you're trying to blame the market when the market was always right in the first place to begin with. It's just your read on the market was wrong. And that's usually how it is for me. That's how it is for me too when I'm wrong. And then we could target. This is an interesting one because once again, we don't trade standard deviations. We trade liquidity. So in this specific instance, right, the drawn liquidity was up here, right? This gap. Maybe you just go for the 5th standard deviation in that case. I don't know, just a thought. Once again, trade understanding of where the stop losses are, not anything else. This is clean. This is so clean, right? 5-minute, 30-second, 3, 5. We end up going to the 8th, but not till later. And yeah. That's just such a clean buy model. It's crazy. It's crazy how perfect that is. Oh man, yeah. Probably good to make the market recap soon. Not quite yet. I want a little bit more information. I also want to look at the first presented for value gap. But guys, I'm really loving these 90-minute SMTs. I think we got to be on the lookout for them more often. Even if they're just a partial sequential SMT, we should still be on the lookout for them. Meaning partial sequential SMT, meaning like it's not with the actual high or low of that 90-minute time period. It's with a high within that 90-minute time frame, not the actual high. But I still think even those can be valuable. 1202 flow state retest 5-minute 30-second. No, this is not flow state retest. This is Phoenix, right? Yeah, this is Phoenix. Flow state Phoenix. Yeah, flow state Phoenix. 1202 5-minute 30-second. Yeah, that was clean. Oh man, today actually was a really clean day. If you just kind of like, if you were a good trader, today was a really clean day. Oh man, I kind of want another break, but I'll just keep going. I'll push through. It must be nice for you guys. You guys just get to watch. But yeah. Let's see. What else? What else do we have? I mean, we did have this inversion. If you like the idea of AMD, then maybe you take this as an inversion. But it's just kind of, for me, it's kind of like, I don't like how we inverse this kind of below the majority of the range. We get this inversion below the majority of the range. You could mark that out. I guess let's look at the 3-minute and see how that closed. Sure, we'll just look it out. I'm not super picky about it. I'm not gonna spend a whole bunch of time marking it out, but right, liquidity sweep. And then inversion. And then you can just target those lows. Very simple trade. I'm not going to spend a lot of time on it. But it does go pretty quickly to our target, which is cool. Once again, not anything crazy R, and that is okay. I think probably 1.4, yeah. So 1040 IFG 2-minute. Okay, and there was also this inverse value, but this one, we do wick out the high. I'm actually not sure that really matters in this case because, yeah, guys, I think we have to start, stop reading the rules so mechanically and start reading the rules based off of our understanding of liquidity. Meaning, like, this, even though this inversed and we wick out this high, we have low resistance highs here and low resistance highs here. So I would still definitely consider taking this. Once again, guys, once we get better at trading, we have to realize that mechanically following rules isn't going to get us anywhere, because the mechanical people that aren't trading based off of actual stop losses in the market they don't get it. They don't get it. The market's not going to follow your model. The market's not going to respect your model. The market's going to respect where the actual stop loss is in the market. Where are people actually going to get stopped out? So yeah, I actually do like this. Even though we wick out, like, that's invalid, Jake. That's invalid. Bro, I don't care. This is still decent. This is still I can tell that we're gonna go drop to those highs. If you just take this, still a decently high probability trade, right? So just a thought. Once again, I do, like I said, I'm trying not to see the market in terms of mechanical. Like I know that was technically invalid, but by the way, this was so nice. Oh my gosh, it's just beautiful. It's technically invalid, but also like sometimes you just have to see the market as in terms of liquidity and not terms of perfection. But yeah, anyway, 3 minute, yeah, I'll be honest, 3 minute looks a little less obvious. We'll still mark it out. So yeah, it just kind of depends on your conviction. I probably wouldn't take it still, but I just want to mark it. And then here's the IFG that's on the 2 minute, and this one would be a front run of the 3 minute. But once again, if you have conviction, that can be okay. Yo, what up, Jerry? How's it going, bro? You took this? Nice. That's clean. Yeah, it was a nice trade. I was just talking about how we do take this internal high, but as I'm getting better at trading, I'm realizing we gotta, like, technically, mechanically, oh, that inversion's not valid. Guys, look at these low resistance highs. I can tell the market's drawing here. So that's what I mean when I say we gotta stop thinking about the market in terms of mechanicalness and start thinking in terms of liquidity, right? I mean, technically, yeah, we got that high. I don't care. Like, I want to, like, get you guys to understand this is a game of stop losses. If it's not perfect, but it's still gonna drop to those LLR, still think it's decent. I didn't take it because once I was bearish. My bias was bearish, but yeah. But once again, you do, like, that's not saying this is an excuse to break the rules if the drawn liquidity doesn't make sense, right? It's not an excuse to break the rules if it doesn't make sense, but what it is it's saying let's stop thinking about the market one-dimensionally and start thinking about the market in terms of conceptualizing actual stop losses, right? It's not an excuse to take a bad trade. 934 inverse value gap 2 minute. Oh, I forgot to mark that. We're front running the 3 minute gap. So I'm gonna mark that out. So front run. The way I do from the notation if I'm front running a higher time frame gap is I do FR and then 3 minute. And then bang. Meaning front run, meaning like I know bro, you're literally fighting bot. What do you mean bots? Yeah, what I mean by front run is I'll know that there's a higher time frame external gap, like the 3 minute hasn't inversed yet, but because of liquidity, I'm willing to take it still. Exactly. We're fighting some of the most advanced computer algorithms that are out there in the world, and yeah, think about it, right? Think about it. If the market were mechanical, these mechanical models would just rule, but clearly they don't. And the reason that humans still prevail in trading is because, like, even machines are not perfect to understand where the liquidity is. So these the machine, it's not going to take this because it's going to be like, oh, mechanically it broke the rule. It's not supposed to take the internal high. But we're like, we conceptualize these low resistance highs. We conceptualize the sweep. We know this is good signature. And so this is something that, this is why it's so hard to build a bot that is a trader. It's so hard because to be a trader requires having that huge data. It's almost, you have to have a machine learning AI that is built on essentially like the screenshots I take all the time, right? That's what you'd have to do, and I don't know how to do that. I mean, someone could do it. I'm not saying that they can't, but what I am saying is it is not so easy. It's not so easy, is what I'm trying to say. That's why humans still have, yeah, anyway. Let's just move on. You get what I'm trying to say. But, oh my gosh. Yeah, this trade, like I said, this is, like, I'm just marking out what worked. I'm not saying this won't ever fail, but I'm just marking it out. This trade could fail, right? But I'm just marking stuff out. What else do we have? I guess, it's very clear that this was a gap. I had this marked out, and I was like, okay, I wonder if we're going to get a rejection of this. And we did, right? 5-minute gap, 30-second change in state. See how everything just perfectly lines up, guys? It's just so cool, right? So 5-minute gap, 30-second change in state. So 5-minute gap, 30-second change in state, down to the second, down to the fourth. So if you're mechanically trading flow state with this idea, you would have banked, but you'd have to hold it and not go break even. And that's the tricky part with flow state, is sometimes, just depends on the context. Sometimes it can be good to go break even if you know we're supposed to run liquidity, but sometimes you actually have to hold it. And that's the part where it's not so easy, because that's really scary to do. And so once again, why was this a good trade? Because we had SMT with this high, and this was a 90-minute SMT, and this was also a 90-minute sweep. So time-based SMT and time-based sweep. Where's the 90-minute? I just saved this. Yeah, 30-second change in state. Backtest of the sniper model spot. Actually, let's mark it out like this. No, let's mark it out like this. Yeah, backtest of the sniper model entry. Yeah, that's pretty perfect, if I do say so. So, yeah. Someone definitely has algo running. Like, it's very obvious that they figure out the time-based SMTs, and then they just have it automated. But I don't even know how you do that, to be honest. I have no idea. I'm not even going to mark out the trade. We know where we put the stop loss and stuff. So flow state, 10:03, flow state, retest, just a regular one, 5-minute, 30-second. There's a million ways to trade these markets. So we should probably get going with the recap, because I also kind of want to film a short form video, and I haven't. This is interesting though. Oh, let's look at the first presented for value gap. You never know. We could have had something happen with it. What about a time-based inducement requirement, like formation of an intermediate term low before engaging? That's brilliant, Kirk. That is really smart. I mean, I've noticed whenever you enter off of an inducement, like for instance, this sniper entry, right? When we take this sniper, once again, what sniper model? This is my model that I made, right? Because of my own backtesting, I discovered it, right? When we have a flow state model, for instance, 5-minute PD array, 30-second change state delivery, OTE of the manipulation leg is going to be very sensitive. So what I've noticed is if we have an old high and we come up to the old high and we go above it and we induce it, right? You can have such a tight stop loss. So because a lot of time that's going to be exactly where someone else's stop loss is. So you're pairing your limit order with someone else's stop loss. It's like actually pretty perfect. So let's actually record this. But that's a great idea, Kirk. It's just hard to make it, it's not always easy to do that. But in an ideal world, I would love to make that a rule. But, sometimes there's good trades where that doesn't happen. So it's tricky. So, let's re-screenshot this. So 10:30 flow state. No, sniper model. Let's just call it sniper, and then let's just call it 5-minute 30-second. I'll call it sniper model. Okay. Also, the low inducement formation would allow you to not sit and draw down for so long. Yeah. What I am thinking about, Kirk, is when I take trades on personal account, like having them all be high RR inducement type trades like this. I feel like your risk management on that kind of account would just, like, you could just get these banger trades and you could have pretty tight stop losses consistently. You could even put your stop loss like this. So, you know what I mean? I totally get what you're saying. So 10:30. Sniper model, 5-minute 30-second, number 2. Perfect. And then first presented for value gap. Let's go ahead and look for that. Where was that today? 9:20, 9:30, 9:31. Okay, so it's not this because this is the 9:30 candle. So 9:34, 9:35, 9:36. Interesting. We left some like a voidish thing. It's not there on this screen, so I think that my screen is just glitched. So I'm gonna switch over to here. I think my screen was just glitched. So yeah, so it should be 9:34. I don't even know. I don't understand it, but sometimes it does that. So yeah, we'll look at it on this screen. So yeah, it looks like we do end up rejecting it, and we go down to the low, which is kind of cool. So we inverse it and then reject it. Oh, and then we use it again later. Ooh, that is crazy. Look at that. Look at these curves, dude. Look at these curves off of the first presented gap here. Oh my. Look at how we react to this, guys. I mean, what? Some precise stuff right there. Bang. Bang. Market's just interacting with this thing all the time. Can you mark the intermediate term low inducement? What intermediate term low? Wait, what time? Let me know what time. What time in Eastern time? Oh, this was clean. So there's 2 first strike trades within here, at least. Inversed and interacted with all day. So then, yeah, there's at least 2 of these. At least 2 first strikes. Jeez, dude, it's crazy how perfect these models are. So here's the first one. This is the point at which it becomes very obvious. Actually, you could take this as a higher one if you want to be aggressive. Either way. Yeah, I like the higher one, I'm not going to lie. The higher one is super obvious, right? So first presented for value gap, so 1 minute PD array. And then we have accumulation. Do we have S&T? Oh, that'd be kind of cool if we did, but I'm not going to go look for it. Sweep of equal highs. Manipulation, right? And then 30-second change in state. The reason I like this one and not all these other ones is because these other ones are not obvious. They're not obvious we're going to go run liquidity. This one is. This one's obvious we're going to go run liquidity. So that's the difference. Right? This one's really obvious. And then, yeah. We can measure out. We could target. I'd probably just say let's target the 7th standard deviation. Once again, I don't know why the 7th. A lot of time it's more sensitive than the 8th, but okay, we do go to the 8th this time. So if you want to be super aggressive, you could go like that. That's so perfect. So there's one first strike model. So this is a 1129 first strike. Once again, what's first strike? It's one of my models. It's 5-second change state delivery aligning with 1 minute for value, 1 minute first presented for value gap. 1 minute, 5 second. And then yeah. 1129 first strike, 1 minute, 5 second. It's always gonna be 1 minute, 5 second. And then let's look at the other one, right? Same first presented for value gap, we inverse it again, and then we backtest it. This one, we actually react off of consequent encroachment of it. So here, we end up having change in state delivery, and then we perfectly backtest it, inducing that low. So when we get up here, right, I'd be putting a limit order right at that low. Because this, I know that we have that low, which is right above that change in state. So I'm putting a limit order right above that, right above the change in state. And then we can measure out standard deviations. Well, okay, this is interesting. How should we measure out standard deviations here? Because look at this. This does not really hit very well. Actually, I guess it does fine. I'd probably just do it like that. We do hit the fourth. Wow, it hits all TPs. Just beautiful. Just beautiful. Wow. Guys, it's just a matter of time. I feel like once I can get on a personal account and take multiple trades in a day and allow myself higher RR and get rid of the stress that comes with me feeling like if I take a loss, I can't take another trade again at all, like, and allowing myself multiple shots for higher RR, I feel like I'm going to trade so much better because I'm not going to be so stressed all the time about messing up. Like, I'm just gonna feel more free and more open to being okay with making mistakes. I don't know, I think that's the secret, honestly, because I get so choked up with like, oh no, what if I do this wrong, when in reality trading is just trading and you have to be okay with doing things wrong. That is part of trading. And so I don't know, I think that's a big issue I've had is I trade all across all my accounts and I choke and I get nervous because there's just so much pressure on that trade. So yeah, we go up to the fourth. Okay, I think that's enough backtesting for today. I'm going to take a break, and I'm going to go film the market recap, and then yeah, then I'll post it, and then I'll probably try and film a short form video, but we'll see if I have time. I'm going to try and make sure I have time, and then I'll just go to bed. Oh my gosh, I'm supposed to be going to bed. I'm doing a bad job of getting to bed on time because I'm supposed to be going to bed at, if I'm getting up at 4 something, I have to go to bed at 8 something, and that's just, I just keep failing every single day, but I'm trying my best, guys. I'm trying my best. So yeah, let's go ahead and do this. I'm gonna go drink some water. Ooh, guys, look at what else. One last thing about this trade that we need to talk about this because this is perfect, right? 1310 to 1340 macro. Whew. Okay, yeah, this is one we can't ignore this, guys. What? This is the perfect example of the 1310 to 1340 macro working its magic. Oh, whoops. It's 1310 to 1340 and bracket. Remember to update the Phoenix Models video if you get time this week or next. Absolutely, bro. Absolutely. I'm trying to make a video every single day, so yeah. Hopefully I'll do that. Yeah, hopefully I'll do that this week sometime. I should. So, but yeah, now that we look at this is actually so cool because I think we go run up to that 8th standard deviation within the macro. It literally happens within the macro. Can we get more perfect than that, guys? What? Okay, first we'll save this as a first strike to the 4th standard deviation at 1317. First strike, 1 minute 5 second, number 1, and then did we backtest OTE too? Oh, that's crazy. All right, sounds good, Snowman. This is the last one, and then I'm headed out too. Oh my gosh, we even hit the OTE of the model, bro. Oh my gosh, some of the time I literally can't believe that I know the stuff I know. Like, this is it's just absurd. What the heck? Genuinely, it's just crazy, guys. It's so cool, so precise. Okay, 8th standard deviation. Let's leave that one to go up higher, and then wow. Oh. Perfect. Perfection, guys. Perfection. And look when it happens within our PM macro. Crazy. And we also hit, let's just mark out that we hit sniper model entry. Oh my gosh. Dude, it just doesn't get more perfect than that. Okay, yeah, I'm gonna end the stream here. Let's save this and then I'll end the stream. 1316. First strike. 1 minute 5 second, and then let's save this as number 2. All right, bet. Okay, that's with that, guys. I'm gonna end the stream here, and I'm gonna make the market recap in just a bit, in just a second. Then hopefully I'll make a short form video, and then get right to bed because probably gonna have to make this short form video like super simple. But anyway, thank you guys so much for watching. I will see you guys in the next one.